Are we live? All right. San Diego's housing market is finally starting to see actual home price declines here in 2025. Many of you home buyers and investors in San Diego have been waiting months, if not years, for values to drop, and it's finally happening. The question is, are we finally entering a good place to buy a house in San Diego and Southern California's housing market? Or is the market still very overvalued and are we going to continue to see prices drop? I'm going to answer those questions for you in this video, and I'm also going to be taking your requests in this live stream. So the first thing to understand if you're a potential home buyer in San Diego is the good news. And the good news is that values are down 2.2% over the last 12 months, according to data from Zillow that's available for you to view on Reventure App. This is an actual decline in home values in San Diego. You can see the previous year they went up 9.5%. Now they're down 2.2%. And so this is much needed relief finally occurring for San Diego home buyers. And the whole reason it's happening is due to the fact that inventory is now up on the market. There's 6,100 homes for sale in San Diego County. You could see as of August 2025, that's the highest level we've seen of inventory for August going back to 2019. So declining values, more inventory on the market. Good news if you're a San Diego home buyer. However, this market is still going to feel very expensive if you go to buy a house right now in San Diego. This is a market where the typical value of a house is around $950,000. And I'm going to show you some Zillow listings here in a second that I found that are going to tell you just how expensive this market is and how unrealistic certain sellers are. So, if you're going to buy a house in San Diego right now, a big question is like, what's your budget? And how much are you going to have to pay for the house in terms of mortgage payment? And how does that compare to your rent, especially if you're a first-time buyer? And one of the issues we see routinely, if you take a look at this listing I'm pulling up right here, is the fact that the cost to buy is a lot higher than the cost to rent. So here's a house on the market for $1 million in San Diego. Now this is a 3x2 house. Looks pretty nice from the outside, looks pretty nice from the inside, looks digitally staged. 3x2, 1,200 square feet. It's on the market for 1.08 million. 1.08 million. This is pretty standard issue for San Diego. This is like what you got to pay to get just a normal house. Your estimated monthly payment is $8,600 a month. $8,600 a month on this house. Now, they did a price cut, but you could see it's way above its long-term value estimate on Zillow. Back before the pandemic, this house was worth around $680,000. They're currently listing it for almost $1.1 million, and they've done a $70,000 price cut. So an improvement on prices going down a bit, but still they're going to feel very expensive. And one thing I want to talk to you all about is San Diego's housing market history, right? If you are a buyer and you're looking to buy today and you want to say to yourself, should I get in now, should I wait? You have to understand the history of this housing market, and you also have to understand where a price is likely to head in the future. Because the last thing you would want to do as an investor or home buyer in San Diego today is buy a house and then see the value of your investment go down, especially if you've been saving up on your down payment for the last 4 or 5 years. You don't want to buy and then be underwater on your mortgage. And so what I'm going to do for you right now is actually dive into some zip codes here in San Diego. And I'm going to take some of your requests actually. We're going to dive into some zip codes so you can see the regional differences going on right now in this housing market. I'm going to give you some of my forecasts for where I think values are going to head in the future. So what we're going to do here on Reventure App is just type in San Diego. And you guys can actually do this too at the end of this video. Go to www.reventure.app and conduct this same analysis. But let's start by looking at how have values trended in the last year? And what you can see is a lot of blue here towards the center of San Diego. We're talking downtown San Diego, North Park, Hillcrest. Values are down anywhere from 4 to 5% year over year, which, isn't a crash, but it's also meaningful. A 4 to 5% drop, that means the typical value of a house is down $50,000, $60,000 in some of these areas. And these are some of the biggest declines that we have seen in a long time. You could see here in 92101 in San Diego, values are down 6.6% year over year. That's the biggest drop since 2011. So there are some legitimate declines taking place. If we zoom back out on this zip code map of San Diego County, we could see there are some areas in red and translucent, which are holding on a bit better in terms of prices. Um, Joel here in the chat, Joel is saying that Oceanside is the most affordable place on the coast. We'll look into Oceanside. It seems like values there are down 1.7% over the last year. So it is an affordable place. Actually, I'm not even going to call it affordable. The typical value is 1.1 million. So it's all relative, folks. If you're from Southern California, 1 million to you might not seem that expensive, but if you're not from California, 1 million is going to seem very expensive. In Carlsbad, interestingly, prices are up 3.7% year over year. Rob here in the chat, he's saying that San Diego's home prices are still very overvalued. That's a great point. I mean, how many people can actually afford these houses? If we just zoom back out to the metro level, everyone, and we take a look at the typical home value. In San Diego, it's 928,000. 928,000. And if we look at the long-term graph on home value, this is helpful to understand what you're getting into if you buy a house in San Diego or anywhere in Southern California today. You could see that prices have almost tripled over the last 13 years. So if you bought in 2012 in San Diego, you could buy the typical house for 340,000. That's now gone all the way up to 928,000. And so, a good question to ask if you're a buyer or investor or even a seller is, how do you feel about this price? How do you feel about the action on this graph? Especially if we compare it to the fair home value. The fair home value in the market's this gray line, which we track on Reventure App using data on median income. The fair home value's gone up, but not nearly as much as the actual home value. So you can see that there is some downside in this market. The prices just have gone up a bit too much since the pandemic. They've outstripped the wage gains. And this is also an area in San Diego, everyone, where there is outbound migration. I know a lot of people in San Diego like to talk about the fact that people from LA moved in during the pandemic. You can let me know in the comments if you saw that, people from LA moving down to San Diego. We also heard people from the Bay Area moving down to San Diego. And that was something that juiced the housing market during the pandemic. But actually, in terms of domestic migration, San Diego lost 23,000 people in 2024. It loses people almost every year because it's so expensive. And so actually there's an outflow of people moving out of San Diego, which in the long run should push home prices down. However, there's an issue, and this issue is actually why I think in the long term, Southern California is a great place to own real estate in the long term. Because what you have in Southern California is you have this special combination, this special concoction, this trifecta of sorts that's really good for home price growth over the long term, over decades. And that's three things. Number one is you have an educated, high income population, right? Some of the highest education rates in America, highest incomes in America. You have universities, you have biotech startups, you have a lot of companies all around Southern California. A lot of wealthy people, right? So there's just ingrained demand for real estate. But number two, you have severe constriction on land. There just isn't a lot of available land to build because it's a pretty built out area, right? If you go and drive down to San Diego, I believe is that Interstate 5, correct me if I'm wrong. If you drive down to San Diego on Interstate 5, you look around, the closer you get to the city, I mean, there just isn't a lot of land to build. It's pretty filled in. So there isn't much space. And then number three, the home builders are basically absent from San Diego. They don't build any homes. So it's like there's a high income home buyer population, there's land constriction, and then the builders don't build. It's this concoction that will lift home values over the long run, that concoction. However, in the short term, apparently Joel is saying we call it the 5. So did I get that right? Interstate 5? The 5, down from LA to San Diego. A lot of traffic if you go at the wrong time. Now, where was I? Oh, overvaluation, right? So we here at Reventure App have a metric called the overvaluation rate. And you could see San Diego's housing market across the county, across the entire county, is 14% overvalued. So the typical home price is $928,000. The fair home value is $817,000. And you can see this overvaluation rate, which is a premium data point on Reventure App. You guys can actually, at the end of this video, go to www.reventure.app and access the overvaluation rate for your zip code. But you can see we're 14% overvalued in San Diego today, and we've been overvalued since 2021. Prior to the pandemic, we were actually fairly valued, and then after the last crash in San Diego, we were undervalued. So this graph, this overvaluation graph on Reventure App is a great tool for you as a buyer or investor to help understand, like, am I getting a good deal if I buy in this market today? And if you do buy in San Diego, understand that you do have 14% downside across the county to get back to just the long-term norm. 14% downside across the county. So I do think prices will have some downward drift. We here at Reventure App think they're going to go down 3.2% over the next 12 months. This is the 12-month forecast in San Diego, but they're 14% overvalued. Those are two data points you're going to want to understand for your city and zip code. In San Diego, if you're a buyer right now active in the market, you're definitely going to understand that forecast, that overvaluation rate. Let's see. Can we get some requests actually? Because I know some of you here in Southern California, you're looking at buying. This is an area that is really expensive. A lot of you have been looking for years and years to buy in Southern California. It's actually an area of the country I like a lot. Every year I go to Southern California, spend about 3 or 4 weeks there. It's an area that, I would maybe love to have a place in or live in the future. It's very far though from where I'm from. I'm from the East Coast. Moving out to California on the West Coast would probably be a pretty big move. But I could see why a lot of people like living there. Let's take some requests, everyone. We got 92024 from Joel. So let's look at 92024. And as I go through these requests, everyone, you guys can conduct the same analysis by doing basically replicating what I do in this video. So I'll walk you through this as I do the analysis here. 92024, that's Encinitas. Encinitas. So we're 27% overvalued here in this zip code, Joel. So the typical home value is 1.8 million. Fair home value is 1.4 million. So we are definitely, very overvalued. Not as overvalued as we were in 2022, but this is an area where prices have gone up way more than incomes. Prices have gone up way more even than rents in this area. So, I would be careful buying in this zip code right now. You are buying still near the top of the market if you buy here. Now, have the values gone up or down the last year? They're flat over the last year. So the values haven't really gone down yet. We think in this zip code in Encinitas, they're going to go down 2.7% over the next 12 months. So a little marginal correction. Joel's saying he actually bought in 2017. If you bought in 2017, you bought when it was undervalued. So, this is another amazing thing, everyone. Actually, 2017, it was 4% overvalued back then. It was basically fairly valued back then when you bought, very undervalued prior to the pandemic. Let's see if we can get a couple more requests here. The Poma Valley, 92061. Poma Valley, did I pronounce that correctly? I apologize if I mess up the pronunciations on some of these, everyone. Poma Valley, all right, 92061. Now this is interesting. We are kind of in like the very northern part of San Diego County, and you can see something interesting here is happening on the overvaluation rate, everyone. It's in blue, and it's actually minus 8%. Now this is saying that this zip code is is 8% undervalued. So let's dig into this. Why is this zip code undervalued, and why was it actually so overvalued in 2019? This is actually very interesting data, everyone. You don't see this type of graph very often on the overvaluation rate. So I'm very curious to dig into this data. So first thing we need to check is home values. What's happened to home values here? So home values here have gone up over the last 5 years. It went from 561,000 to 815,000. So home values went up about 40% over 5 years. So there's a 40% increase in prices. But what happened to income? Median income, because I think this is going to tell an interesting story. Median household income went from 44,000 to 98,000. So the median income going from 44,000 to 98,000 resulted in this market actually being undervalued. Now this is a very interesting case. You don't see this happen too much in the data. The median income more than doubling in an area in 5 years. This is still an expensive place to buy a house. However, we don't foresee a big crash coming in this zip code due to the fact that the incomes have gone up so much. I'd be curious for the person who asked me to review this, like, have you seen this like in your market over the last 5 years? Can you tell that the incomes have gone up? We think prices here are going to be flat over the next 12 months. All right, let's get a couple other requests here. We got 92009, 92009. And really, folks, when you conduct this type of analysis, if you're a home buyer, the big thing you're trying to say to yourself is, I don't want to buy at the wrong time. I don't want to buy and then have values go way down. I don't want to lose money. Also, if you do buy and values are going to go down, you want to know ahead of time. Maybe you can negotiate a cheaper price as well. So we're looking here south of Carlsbad, 92009. 92009. All right, southeast of Carlsbad. This might even technically still be Carlsbad. Home values here are flat over the last year. So flat home values over the last year. Our 1-year price forecast on Reventure App is -1%. -1% forecast over the next 12 months. So this is an area that's stable. It's flat over the last year, -1% forecast over the next 12 months. In terms of overvaluation, it is 35% overvalued. So it's a market we're saying is stable right now. There isn't enough inventory in 92009 to cause a crash. There isn't enough inventory to bring down prices significantly, but they are very disconnected from fundamentals. They are 35% overvalued, which is one of the most overvalued zip codes we have here in San Diego. And one great thing you guys can do when you go to Reventure App to analyze this data for yourself, you can hit table view. I'm going to show it to you here. Actually, take away my video. You can hit table view on the bottom, and then you can see a list of all the different zip codes in San Diego or any other metro, and you could sort any data point you want, and then you could download the data into Excel, which is actually a great way to actually, if you guys want to make short lists of the zip codes that are best and worst to buy, and you want to kind of start preparing and trying to find areas that are going to be best suitable for you to buy. This is a great feature to use. Get the data into Excel, target the exact data points that you want to target here in table view, so you could see analysis all across the cities and zip codes in your area. But let's see here. We got time for a couple more requests actually. How about, so Andre is saying something interesting. Andre is saying that most houses are sold after 1 to 2 price cuts. Most houses are sold after 1 to 2 price cuts. Yeah, so in California, in Southern California, values are dropping officially, but there still is tighter inventory than other parts of America. So that's why, you'll still the market might even seem fast to you, even though values are dropping. We have another request here, 98022. This is from Chris. This is actually in Washington. So we're going up to Washington, everyone, for a hot second here. Now this is interesting, Chris. You just gave me the biggest zip code ever. So I don't know where you are in this zip code. It looks to be a lot of mountains, but we're going to try to analyze this zip code here in Washington, then just get back to Southern California. Our 1-year forecast here in 98022 is -2.8%. 1-year forecast overvaluation rate is 2.4%. So interestingly, we don't think this area is going to crash in King County in Washington. It's actually fairly valued. Why is it fairly valued? This could be another example of median income going up. Median income went up from 65,000 to 123,000. I mean, folks, look at this. This is definitely some pandemic craziness here, right? This is an area that was kind of average income to below average income to now well above average income. That's absolutely wild when you see that type of increase in median income, which is why actually we don't think 98022 is that overvalued. We do think prices are going to drop 2.8% over the next year. All right, we also have a question here in the chat from HH Design. He's asking, is a crash in Dallas not here yet? Are DFW prices going down? Well, this is a Southern California stream, but I know a lot of people from California do end up going to Texas, so I'm just going to briefly touch upon Texas. Home values in Dallas are dropping. They're down 3.5% over the last 12 months, and we have a pretty heavy downward forecast in DFW over the next year. There's a lot of inventory, but it's going to depend a lot on your zip code. So HH Design, I would recommend you go to Reventure App, check out the zip code level data at the end of this video so you can see for yourself. All right, let's get back to Southern California. 92602, Irvine. This is in Orange County. So Orange County is definitely stronger. Orange County still has upward prices in a lot of areas, everyone. Orange County is still going up. So check this out, everyone. LA County, a lot of LA County is going down. Orange County is still going up year over year. 92602 is up 5.1%. Typical home value, everyone, of $2 million. I mean, that is absolutely wild. $2 million typical home value. That's just for the standard house here in this zip code in Irvine. What's our 1 year forecast here? Minus 4.8%. So we do think values are going to drop. This is a market that's shifting. I bet you this is inventory related. Let's look at the inventory here in 92602. Okay, inventory is now going up. Inventory is now going up. Days on market's now going up. This is a market that's shifting fast. So while it's still up 5% in the last year, we think it's going to drop 4% over the next year. That's good news if you're a potential buyer in this market. All right. I think one more thing I want to touch upon, everyone, is just the 3 county area in Southern California. Is, we have Orange County, right? And then we have San Diego, and we have LA, and we also have Riverside, right? So these are kind of, I should say, it's a 4 county area, and people are often moving between these counties. And home buyers might go from San Diego to Riverside, or they might go from LA to San Diego, or they might go from San Diego to Orange County. We can see that values are down in San Diego. They're down in Riverside. They're still up 2.1% in Orange. They're flat in LA County. So, it's kind of a mixed picture here, but the big story is inventory. Over the last year, the inventory has gone up in all of these areas. 33 to 40% inventory gains in all of these areas in Southern California, which is starting to lead to that price slowdown. The other thing I want to talk about to you guys are the home sales. The home sales are down year over year, and the home sales in some of these markets are really low. Like in San Diego, the home sale activity, according to data from Redfin, which is available on Reventure App, the home sale activity is down 50% from pandemic levels. I mean, look at this decline in demand. And this is the one thing that has me thinking maybe, could Reventure's forecast in San Diego be conservative at minus 3.2% over the next year? When you see demand this low, there isn't a huge margin for error. So if inventory were to continue going up, if there were to be a recession, right, combined with demand this low, now for really, folks, 3 years in a row, demand has been on ice in Southern California. It just didn't feel like that because inventory was still low. Inventory was still low for the last 3 years. Now inventory is getting back to normal combined with really low demand. So I think that's something that's going to cause increased chances of home price declines into the future. We'll have to track this inventory going forward. And ultimately, what you guys need to do as a home buyer in Southern California is you need to educate yourself on your city and zip code. What's the home price forecast? What's the overvaluation rate? Those 2 data points are going to help ground you with the knowledge of if it's a good idea to buy today. And if you do buy, what should you offer? What type of discount should you look to get? Additionally, there are some markets we're still forecasting are going to go up over the next 12 months in Southern California, zip code by zip code. There's other markets we think are going to go down as much as 5 to 10%. You're going to want to know where your zip code, your city falls in that. So head to www.reventure.app right now and then search your area in Southern California. You can just get started by typing in San Diego if you live in San Diego, or any other city. You could type in Irvine if you live in Irvine, or Los Angeles if you live in Los Angeles. And what you're going to want to do to access that home price forecast is you're going to want to upgrade to our premium plan, which comes at the affordable cost of $49 a month, which is less than 0.005% of the cost of buying a house in California. This data is really invaluable for you as a home buyer. You can sign up for the monthly pass or the annual pass, which comes at a 32% discount to the monthly rate at $33 a month. Ultimately, a very affordable cost to the cost of buying a house in California for the peace of mind about where values are heading in the future. Thank you guys for watching. If you're a home buyer in Southern California, make sure to go to www.reventure.app to access the data for your market. This is a market that's starting to shift down. Prices are starting to drop in many markets, but you're going to want to see where they're heading over the next year. Do that at www.reventure.app.